All right, brother, bring it on. Let's do it.
I'm waiting for it to say live. We are live, Tim. How you doing?
Dude, doing phenomenal, man. I can't wait for the government to come back on board.
So, Tim, the big headline, Donald Trump's introducing a 50-year mortgage. Was it
What?
FDR that introduced a 30-year mortgage?
He did, man. It was exciting, man. It was
And
exciting
it was like
times.
this game-changing moment, because prior to you probably had to put 50% down, and you had like maybe 5-year amortization or 10 or something like that.
Exactly. Remember back in the day, let's talk about the Great Depression days, you had to put 50% down. The loans were held by the savings and loans, right? Remember the savings and loans? In fact, there was a Jimmy Stewart movie. Remember that? The Jimmy Stewart movie where
yes. It's my dad's favorite movie. We watch it every Christmas.
There you go, brother. Well, you know
what I'm talking about.
So Wonderful Life had to put 50% down, and the mortgage could be called at any time. It was an interesting time, my friend. It really was. But those days are gone, because that's when really HUD came out. FHA came down with that 3.5% down product and just changed the whole world of financing, man. Then we had World War II. We had the VA product came out. Then we had Fannie and Freddie. So it's a lot different world today. There's no question about it. But everything is based on a 30-year. Oddly enough, this is kind of interesting. Most other countries have a 50-year mortgage.
Interesting. So let me ask you this question.
Sure.
Do you think the 50-year mortgage will save the housing crisis that we're currently in?
Unfortunately, the answer is no.
All right. Would you like to expand on that, please?
Yeah. So going from a 30-year to 50-year really only changes the payment by a couple $100. Here is the catch-22. Everything is affected by the interest rates, right? And most mortgages are programmed, or interest rates or bonds, if you will, are purchased by like insurance companies, investors, etc. Well, most of the investors out there are gauged to do a 30-year mortgage. But if you want a 50-year mortgage, the interest rate's going to be higher. So now watch. So if I go 50 years out from 30 years, you should think the principal is a little less, but the interest rate is higher. It's going to offset itself. And unfortunately, there will be very little difference at all between the two.
Well, most people do not live in their house for the entire 30 years. Do you know the percentage of people that actually finish their mortgage if they just make all the payments?
I don't. I'm fascinated. Do you have that statistic?
I don't. I bet that GPT could probably answer that question for us.
Chat probably could, man. You want to flip it in real quick? See what chat says. 12%? Brian, is that the number you're getting?
I didn't type it in as fast as you. I'm just pulling it up. My computer's lagging.
I hear those keys burning though, man.
According to ChatGPT, it says I have no data.
According to my data, it says 12% people live in their house for 30 years.
It says 40% of homeowners have fully paid off their house.
Oh, mine are Canadian statistics, Brian. I'm sorry, I got the wrong country. But what's that tell you? The majority of people don't stay in their house. I mean, let's just face it. We're such a mobile and transitional, people. We don't stay in the same house. We constantly move from one to the other. We're moving because of jobs, statistical. We're moving because of family expansion. There's supply and demand. I mean, there's so many different factors involved. There's no question about that. But realistically, do you think people will stay in their house for 50 years? That's the biggest question.
I mean, you'd have to buy it when the average first-time home buyer is now 38.
So 38 and 50 years, be 88. Yeah. That makes sense.
Yeah. I mean, can you imagine being 87 and be like, hey, we got 1 year left?
I'll tell you, I would have preferred to see one of three things, with all honesty. I would love to have seen, interest only program where, it's first 10 years are interest only, and then it goes to a 30-year am. No, then it goes to a 30-year amortization, right? So that
you're talking about that pick a payment stuff, Tim.
No,
that option stuff.
Now you're thinking about
I know it's different. I know, but that's not.
This is still a fixed 30-year mortgage. maybe a
Can you imagine
graduated
making
payment
10 years of
mortgage.
payments and you're struggling for 10 years and you finally like, all right,
I'm ready.
and then the payment goes up and you've made zero progress on your mortgage?
And the value has gone.
Yeah, possibly, probably.
Well, I think honestly, if you want to tell you the God's honest truth, I think the best programs were the graduated payment mortgages, which were loans designed to graduate you into the payment over a serious period of time. You know, a 3-2-1, and it's like a 2-1 buy down in essence.
A
But
3-2-1 is
yeah,
just it's too fast. No one's income goes up significantly over 3 years, and you're talking about um pretty significant increases over that period of time. I would say a 5 or a 10-year increase would probably feel a little better. I mean, they front load all the interest. You know what I'm
sure.
saying?
No, I think either a graduated payment mortgage would have been option number one. I don't understand why FHA loans are not 100% financing. That always blows my mind. I'm not gonna lie to you. I mean,
Well, they
VA
want some
is
skin in the
100%.
game.
VA is 100%. USDA is 100%. Right?
Yeah, yeah.
Think about this. FHA is 100% if you put into position all the HFA programs, all the Maryland Mortgage Program, the Virginia Housing Department Authority, the Pennsylvania Housing Department Authority, you name it. They all have different programs, right? It's 100% financing, man. So why don't just straight off top offer it? Offer adjustments to the PMI, offer adjustments to the rate based on your credit scores and what you put down. Period. End of story.
Yeah, I have to say that in my opinion, this is just a poorly thought out idea, and it doesn't take into an account reality for many Americans and just finances in general. Like,
Right.
can you run some numbers for us?
Hey, man, what you got?
Just pull up like a calculator and just run. So the average house, last time I checked in the Northeast, is $540,000.
Okay.
They always show people putting 20% down, but I don't. I like to look at this. Well, I'm saying when you're reading an article, there's always an assumption that you're putting 20% down. Like anytime even when you see like an advertisement for a payment, it always assumes 20% down. It's just like the default. It's like what the assumption is automatically, right? But realistically, 540,000. So realistically, most people don't put 20% down. I don't know what percentage of your clients put 20% down, but in my world, it's not. The only people who put 20% down are the ones who just sold a house. I've been 16 years, almost 17 years. Wow. That's a long time in this business.
Getting old, I'm just saying. Yeah, man.
And helped hundreds and hundreds of people. And over that amount of time, I'm sure I've seen it before, but I don't remember anybody saving up 20% to put down on a house in all of my years.
No, it's a rarity.
As a first-time home buyer.
Nobody has the money to do it, man. Yeah.
All right. So getting past that, let's talk about realistically, you're going to say we're going to do FHA. Right, FHA is 3.5% down. No programs. Let's use numbers for FHA.
Okay,
this is what a lot of first-time home buyers use. You can use it in all 50 states. You can use it in all the counties. There's no restrictions on location. Whereas USDA and VA, they have other restrictions. You have to be a veteran and live in certain areas. So with FHA, 30-year versus 50-year, what is the payment difference on a $540,000 house?
Damn, man, that would be kind of wild, wouldn't it? Do you
use
this is common? Yeah,
use 1% for taxes and whatever you want, $2,200 for homeowners insurance. So this is going to be a PITI all in full payment.
Okay.
When I read the articles about this, I was highly disappointed because I remember thinking it's like $350 a month. Like that is such a insignificant.
Interest rate's going to be so much higher, Brian. That's the problem.
If it's the same, let's just assume. Let's just pretend for a moment that it's the same. Let's say that Donald Trump says, "Hey, Fannie and Freddie, you guys have to offer this at the same interest rate as a 30-year mortgage." For somehow they've rigged it. I mean, we subsidize gas. Do you know that?
We do.
We subsidize corn. We
Mhm.
subsidize beef. We subsidize a lot of things in our country. Corn's a huge one. Why not mortgages? Or do we?
I think we do, Brian. I mean, I hate to tell you this, but when you think about mortgages in general, we do subsidize. And the way
All right.
that we do it is we provide a program called an FHA loan, which has a certain default rate, right? I mean, let's just call it.
But the insurance covers the default rate. It's not subsidized. Subsidized means that they put in our tax dollars that
Sure.
we're not getting back. FHA profits. It makes money.
Actually, it doesn't make money. Ultimately, it breaks even. That's the whole goal.
Well, last article I read said that the default rate was very, very low and that they were profitable. So maybe I read the bad article.
So let's take a look at it. So the payment on let's just use 6 1/4, $540,000. We're going to put down 3.5% down, assuming 1% of the taxes, $1,800 insurance plus the PMI. Payments $4,102 on a 30-year mortgage.
All right, $4,102 for a 30-year mortgage.
50-year mortgage. Okay, let's just kind of drop that puppy down. $3,728.
Yeah, and the difference is.
No, keep it on $332 and hold on here. 4,102 minus 3,728, $374. That's massive.
I was off by $24.
Yeah. So now assume the interest rate's going to be much higher. Let's take 6 3/4. The payment is $39.27. So $39.27 minus 4,102, it's $175.
This is what I don't understand. So if anybody who is a banker and a mathematician and in the mortgage business advising on this, wouldn't it just be an obvious, like, hey, this is not worth even, like, this is kind of embarrassing.
Yeah. Why are we even proposing it? Now,
Yeah,
there are some countries that are right now playing with you're going to hate me to tell you this, man.
100-year mortgage.
Yeah.
Well, isn't that what they do in England when they have those land leases? Like, technically, you don't own your land in England; it's owned by the dukes,
by the crown. We call it the British.
And you pay like a $500 over. You do 500-year leases or 100-year leases. Isn't that what they do?
Well, I mean, let's look at the 4,102 was the payment, right? So the payment on a 100-year mortgage, ready, is 3,605. We're talking a difference of $500, Brian, and then you're going to pay interest for 100 years.
Yeah, it's too bad. We should have prepared better for this. I'd love to know how much interest you pay over 50 years versus 30 years. Like, what, you know how, like, when you're going through, I did this yesterday, you get a stack of papers like this.
Well, here's the
somewhere in there, like page number 357 is the amortization table, and every settlement you go to, every title lady or guy always has some joke they always say about it. And they're always like, don't read this or don't look at it too long. And then we all make jokes at the table. And then
here's what I want you to think about. You ready? On the 100-year mortgage, you're paying $5.43 in principal for the first year.
Yeah.
$5 every payment, $5.43, $5.46 goes up 3 cents, $5.49. Now let's go to the 50-year mortgage, right? And we're going to keep it at what we've been looking at, which is 6 1/4, 540, and just do the numbers really quickly here. Okay. You're paying $127.99, $128 towards principal. Here's my question to you, Brian. Why don't we just go interest only and skip the $128? Doesn't make that big of a difference.
I don't, there's nothing about an interest only that makes me feel good about anything.
Right.
What's the point of owning a house if you're not even?
Well, because your investment is just going up in value, right? You assume, knock on wood, right, that we're still going to see things appreciate over a period of time. But still, you're right. It is a question. It really is. So what would have been a better product? The buy down, the graduated payment mortgage. I think an interest only would have been an option especially for conventional, stronger clients that are starting to see some adjustments, from that perspective. I think there's some clients that would have benefited from that product. I think 100% financing. Why would you get an FHA loan and have the poor guy tap every freaking penny that he has put into the house and then he has no reserves, no money left at all. And then guess what? Here he is. He owns a house, but then hard times hit, and they don't work for, they're out for 30 days or 60 days, and now they can't make the payments for a month or two, and now they're behind. Wouldn't it have been better to have had a couple months of payments in the bank as reserves?
Yeah, if that's what they would do, but that's not also realistic. Most people don't save a couple payments in the bank just because it's, the money sits there.
Sure.
And you have this priority list of things, and kids' braces pop up, and you need a new car and all this
Right.
stuff, and it ends up just not sitting there. So I like the idea of locking people into a reasonable amount of time. 30 years even feels like a long time.
It does, and that's my whole point. 30 years is a really long time. And if that's the case, Brian, at the end of the day, you got to ask yourself, look, if this is a 30-year repayment, right? And now I'm thinking about going with a 50-year repayment or maybe a 100-year repayment. What was the real value to begin with? Not so much, man. That's
Yeah, it's I don't know. I know there's different ways you could sit down. I don't have access to the answers. Like, to me, it seems like if they could increase the what's the term for the mortgage insurance on FHA? Everybody calls it something different, a funding fee.
And it's called a mortgage insurance premium, MIP, because it's not
Okay.
private mortgage insurance, which is PMI.
Right.
Yep.
Right,
So one's
right.
private, one's
Well,
government.
I'm talking about the fee, because there's a fee and then there's a monthly.
So there's an upfront MIP, and then there's a monthly PMI.
All right. I feel like if they increase the upfront MIP a tad and subsidize, it's like a rate buy down thing, or if they just, like I said, they subsidize everybody else. It seems like maybe, and I'm not a socialist or a communist, and I like the idea of free markets, but there is ways to sort of massage things. Like, the reason why they do that with corn is it in some ways it helps, because if you planted corn and you were expecting to make $100,000 and the market crashed and you only made $30,000, you can't afford to do corn next year.
Right. Correct.
Well, and if
And
the
you
corn
need
the
a
next
crop.
year you made
Yeah.
$150,000, then that would be great, but you'd have to save up for the year you made $30,000, and it creates, it's like being a real estate agent with your income. It creates chaos. Whereas if you say, hey, we're going to pay you $75 for the corn, or whatever, right? 75,000 for the corn guaranteed,
Sure.
then you can make plans, and I think it smooths everything out. I feel like if they were to come up with a way to subsidize, and I don't love that word, but if they could come up with a way to subsidize the interest rates just a bit to kind of help people out, or create, like, again, I'm not a big fan of these ideas here, but what if somebody was younger and or their income was lower and or they had some other special circumstance, maybe they had a lot of children or something, like you could get deductions for the number of children or deductions for your age. It's hard. So I would say, it comes into an unfairness thing pretty quickly, but it's just some way to get the rate down for everybody. So I was reading the Fed's comments on this, was the people that were against this idea is, and this is sort of like the behind the thing that's not spoken about. They want you to have a tough market for a couple years in a row in order to be able to see house prices stay stagnant.
So kind of like a cleanse.
Yeah. Well, I don't know if you call it a cleanse, but if house prices stay stagnant for several years and incomes go up, then house prices technically go down.
Technically, we'd hope to see that, right?
I think that's what they're waiting on. The problem is it's so far out of whack. It's going to be a long thing, and that's what you and I have been talking about for a while. This is probably almost a generation that is going to be in this quagmire, and there's also a chance that house prices go up during this time. And if they keep going up, it's just going to keep the ceiling so high. Like, you and I have some clients we're working with right now, and their payment's $4,000 a month for an average house, like very average house in our area, and they're
Right.
just having a hard time swallowing the pill. So I'll give everybody the advice that I gave them. And you and I did a settlement yesterday where they took my
Mhm.
advice, and that is to buy a house that has an income producing potential to it. Buy a house that has an in-law suite in the
Mhm.
basement and or over top of a garage as a way to subsidize your income. To me, that's the best way to go about it. I realize that you have to be a landlord now. You have the potential of somebody damaging your house and causing chaos and all these things. There are ways to mitigate that. You can
Right.
screen your tenants. You can, ask for different things up front. You can
Correct.
try to do things to mitigate all this. I think that's probably or a multifamily situation. Like we have another settlement on Friday
Mhm.
where 3 families are moving in together.
Isn't that wild as hell, man? That's crazy.
Well, I heard a prediction from a builder 10, 15 years ago, and he said in the future, he was talking about the houses they were building at the time, these
Right.
4,000, 5,000 square foot houses. He said in the future, people are going to move back into walkable cities. This is assuming the crime rate ever goes down.
Right.
Jose wants to ask a question. Go ahead. If you want to ask the question, just put it in the chat. Um, assuming that I lost my train of thought here.
So people were going into walkable cities.
Yeah, so people would if crime rate so this is happening in Texas right now. They're building walkable
Mhm.
cities where people actually golf cart, they take their kids to school, then they go to
Sure.
Starbucks, then they go to Target, then they go to the park, then they pick their kids up from school, and then they go home from the golf cart. And then you have these like in the burbs, you have these 4,000 square foot houses.
Mhm.
And in the future, that end up being a lot of multifamily situations. I'm seeing the beginning of that already. I've had multiple settlements this year where families are moving in together. I'll be honest, I don't hate that idea. It's not part of our culture. It's not like we went from a culture where you lived in a village and multi generations,
Right.
not
Right.
families, but generations lived together. I guess you call them
Mhm.
families. And then we came up with this idea that like you send your kids to college, they move to another state, and then we just live life over Southwest Airlines.
Mhm. Mhm.
And I think that it would be better for our culture if we got back to a place where people had multi generations living together in the same house. I actually tried to explore that with my mother-in-law before she passed, and even my daughter, who recently got married and bought a house, and she lives like 5 minutes away. I don't
Mhm.
necessarily want them to live in my house, but I wouldn't mind if they lived on the same piece of property as me or in my house. Not maybe not, but you know what I mean? What do you think, Tim?
But I think they did really well. I mean, didn't they buy a house that did have an in-law apartment? And the husband with your son-in-law was very aggressive and he understands it and he took it all in consideration. And I think that was a win-win for him, don't you?
Yeah. Someone put in the chat that humans need to explore. It's boring to live together. I think one thing you got to take into consideration, this is sort of getting into a different area here, but the
Sure.
idea that I think children are more well-rounded when they grow up around not just siblings, but also aunts and uncles and grandparents and uh, neighbors that share the same values as you do, and that
Mhm.
it makes more well-rounded children. What we have now is, families that are having 1 or 2 children and they're growing them up in isolation. Kids don't play outside anymore. They're spending all their time on the internet or playing video games. And I
Homeschool,
think
right?
we can all agree that the mental health of the current generation is the weakest that it's ever been. And I think that is part of it is they don't have human exposure. And the idea that you grow up with a lot of siblings, which I didn't, but if you grew up with a lot of siblings, you have people that care enough about you or close enough to you that they can sort of knock you over the head when you're acting like a goofball or you're
Right.
out of line or you're socially awkward or whatever it is. They can sort of help, you know, round you out a little bit. We're getting off track here, Tim.
Well,
But
at the end of the day, we're just trying to find an answer to the housing affordability index right now, right?
yeah,
Let's
move
call it
in
what it is.
together, move
Yeah.
in with another family, and it would be better if it's your own family. But if not, move another family into the basement, buy a house that has a basement apartment. I don't know about making, you know, under $200,000 and taking on a $4,000 mortgage, Tim. I don't know. It just feels like if there was a financial crisis, you're only 2 months away, 2.5 months away from, 10 grand in the hole, and you can get in the hole pretty quick. And trying to climb out to raise an extra $10,000 or $20,000 if you get into a situation, it just feels like that is a burden that I don't know how most people would be able to take care of.
My philosophy, Brian, is I agree. I think you need to have adventure. I need to get out. You got to get out of the house and you got to establish yourself. If you don't have the demand placed on you, you're going to be soft. I mean, I'm just telling you, to be honest with you, you're not going to be able to make decisions on your own. We're just going to create a weaker generation. That's the guy's honest truth. And you got to take risk. When you first learned how to ride a bike, did you take any risk?
Yeah, so you're saying when you're younger, take the risk, buy the house, and the other one's buy a fixer upper. I mean, there's only so many options out here, guys. We're not like wizards, right? You can buy a house that has a rental. You can buy a house that is a
Need some
fixer
tender
upper.
loving care. Right, correct.
Yeah.
And at the
In
same
order
time,
to get ahead.
and there's not a problem with house hacking. There's not a problem with renting out the rooms to other people. There's no problem at all, bringing other people on board to live with you temporarily, because it's not like you have kids, not like you have, 2 or 3 kids living with you and it's a husband and wife. If it's just a guy or girl or maybe a couple buying a house, what's the problem with renting another room or 2 out? That to me is a win-win. So I think there are solutions out there. People just have to be willing to be outside of their comfort zone. That's all it comes down to, honestly.
So you're saying these generation is soft, Tim? Is that what you're saying?
I am saying this generation is overwhelmed by the technology. They're overwhelmed by the options that are made available. I think quite frankly, our generation tried to make their lives as easy and comfortable as possible, and it may not have been the right decision.
I like it.
Yep.
So the struggle that people are feeling right now, you're saying, get over it, sissy boy. Is that what you're saying?
No, I'm not saying that at all, but I'm saying that people have to be realistic about where they are. I mean, you can only change so many things, right? I'm just saying it just is what it is. So let's go ahead. Like Tommy Pilkerton says, ride the bike, man. Just ride the bike, brother.
Yeah. All right. So that's what everybody needs to do. Everybody ride your bike. Stop being a sissy boy, according to Tim Murphy. Thank you, Tim.
All right, guys. Have a great day, man. Talk to you later. Bye.